I'm Ali Patterson from Fintech Finance, and this is Sibos 2015.
Well, basically, for the client, I think Swift is a mission-critical application, so it's very important for them. So they outsource their application to us, because running a service platform with infrastructure is very robust, is secure, so we have all those audited certification in place.
We are offering banking solutions, and now in Sibos we are offering solutions for banks and corporate. This is new to facilitate the payment between the corporate and the banks.
Number one, we promote us to be the number one kroner bank in Norway, and for all international banks doing business in Norway, we are the obvious gateway to Norway. That's our main message here among the international banks.
I mean, Sibos is obviously everything from payments to capital markets to obviously a lot of fintech innovation, as you've seen from the InnoTribe stuff. Yeah. And a lot of what we're about is really about making a change happen for our clients. And so a lot of that is about helping to drive innovation. So some of the things we're talking to our clients about really what's happening tomorrow in the world of, for example, payments.
Very strong human capital management system, CRM system, financials, pure full suite of ledger, reporting, billing, consolidation, budgeting, all of that. Coupled in that with asset management components, reporting and analytics, coupled in underneath all of that with a very strong integration channel across all of our product suite.
What we're doing is on the risk management side, it's an enhanced due diligence. Banks have a pressure of, have you done the right due diligence on your customer? It could be new customer or an existing customer. So the regulator rates it that high risk customer, medium risk. You have a regular frequency that you have to go through it. If I'm a large bank, I've got 10 million, 20 million customers. How do I remediate that on a regular basis?
We're now looking at technology that is starting to undermine the old legacy systems, the old networks, the old mechanisms like charters and so forth. And blockchain has the potential to be very disruptive in that respect. But we can't talk about Bitcoin because there's a whole regulatory issue associated with that. So it's interesting to see that the mainstream banking sector is now getting on board with fintech, at least in respect to some of these technologies like blockchain.
So for us at MySys, it's all around digital. So digital for corporate banks. Digital's largely been a discussion about the retail market to date. We think there's a huge market opportunity for corporate banks to also embrace digital because corporate customers demand digital solutions as well.
As you can imagine, there's a weight of technology on the banks today. There's a lot of infrastructure, there's a lot of silos, there's a lot of systems, and
A lot of silos.
a lot of costs. So the banks are really looking to dramatically reduce the cost of ownership, the cost of technology, and really break this habit.
The blockchain technology is interesting. At the core of it, however, that we're still going to have to deal with this issue of how do you relate back to your core assets? In other words, passing the book around through multiple intermediaries is great from a settlement point of view, but at the end of the day, you still need to have the trust to know that you have a core asset base there.
I think it's for banks to work out how they can work effectively with these disruptors rather than necessarily see them as competition, and find a way on what the proposition really is for clients and the market at large. But with the speed of technology change, that seems to be a massive trend.
So we're promoting a new blockchain analytics tool called Elliptic AML. So what we've done is we've taken the Bitcoin blockchain and reduced it to a web of entities and the interactions between those entities. And that's useful because a big concern of many financial institutions when they're talking about digital currencies is how do they determine source of funds? How do they know where the bitcoins they're receiving have come from?
I think that institutions need small disruptors because institutions by their nature find it difficult to disrupt. As it is, small disruptors need institutions because they have capital, scale, and the ability to license in different countries.
Well, the first onset, it's really so much further than the design. It's really around user research and understanding our clients' customers. That way, we're designing for the particular audience segment and making sure that we understand the products and services that they're looking for based on their behaviors and needs, and less about business silos.
So we have been working for the last 6 months to understand the life of digital natives and their financial life and their relation with banks in a consortium together with Antimis to see what's the future of banking, to rethink banking. And we created a report on that called Always in Beta. And that report now we turned into a workshop.